So today the market got destroyed in one of the most anticipated weeks of the year. It's one of the weeks where a lot of big companies have earnings coming up, which will show that either the company is profitable and looking good for the future, or the opposite. But today there was a massive sell-off that seems to be like a trend in the last 20 days. After hitting all-time highs not too long ago, the market took a big beating again, tried to fight back, but took another beating, and in the last 20-30 days it seems like it keeps beating down with small recoveries along the way. A bear market or a sell-off of the market could continue at a later date. There's a lot more news every single day of the COVID cases rising back up and no stimulus to help out along the way. So when we see this market sell-off, we always need to be ready as traders what opportunities can arise. Of course, shorting market with stocks like SQQQ, UVXI and SPXS are some of the best ways that we can hedge against this market. But why? Why do I think this market is gonna continue selling off? Well, as you can see on the biggest trend, the market after the big COVID news started to recover, and it covered a bit too fast with stimulus helping it push forward. But after hitting all-time high, the stock market doesn't look much better than it was a few months ago. With hopes in the beginning of the COVID will probably be done by March, April, May, or even at least the latest during the summer, now that happened, so the hope is slowly fading away. And now with the winter coming up, COVID cases keep rising, and companies that were already struggling might be struggling even further. People that already might have lost their job, they could add to that, and as we know, the unemployment rate is still really high, much higher than it was when the market was pre-COVID. So those hopes that we had, that the market was hoping on being done, it's slowly fading away. The market evaluation, of course, is a projection of the future, and the future looked brighter months ago when the COVID first started because we all thought it was going to end relatively soon, but it looks like it's not, and it's here to stay for much longer. And with the cases rising all over the globe, this means that the future of the market seems more gloom. So it continues to be selling off as people are afraid of losing their job, losing their money, and companies don't know if they can afford having all this money invested in the stock market. Of course, during this downtrending, just like it downtrended before the COVID, there was a lot of pushes back up from the market. And yes, I do think that there will be some good green days that you can profit on, but I do think overall the trend will be downwards, at least until the beginning of next year. Even if there was a vaccine coming out, as we can see from the polls, most people would not agree to even take this vaccine. The skepticism and the negativity towards any vaccines being rushed really puts people away that they don't want to try this medicine, so even that might not be able to help this market. With all these cases keep rising, there's more fear of another lockdown happening, and we all remember what happened in the first lockdown, and something even more bigger could happen if there was a second lockdown. Just because it happened already once and then we weren't able to beat it, the second time will be much harder. And just to throw a wrench in the stock market, there will also be the presidential election coming up very soon in a week. So people on each side are fighting on who's going to be the president, and nobody has a clear winner yet. And of course, because the ballots will be by mail, who knows when we will actually know who the president will be. It might be until December, January, February, who knows? Who really knows when the actual president will be elected, which adds more to the fear and the panic that the people are having during this market. So all this combined really show me that the stock market is for sure on a downtrending pattern. And also within the first 3 months of a new president being elected or an old president being re-elected, the stock market doesn't perform particularly well because everybody's worried about what this new president, what his policies will be like, and what will it do to affect the stock market. So everybody's very wary to reinvest back their money they had until they have proof that the president that's elected will make policies that will benefit the person. So now what I do think there's one ace up the sleeve that the government could do to help save the market and help push it up, just like they did before, is motivate people to invest back in and give them something to hope for, which is the stimulus package. But with the stimulus package, there's been no real concrete answer on when that will be made. Of course, both parties are fighting of who wants which, and it seems like neither one are budging to get the stimulus done when the market is in desperately need. So that is the one ace up the sleeve that I think the market has to not keep falling down and trying to recover much faster. Of course, who knows when will this happen? And of course, with the election being so close, both parties have their own reasons on why they don't want to pass it. and of course that's hurting the market. So that's just another reason to add why the stock market is in the downtrending pattern. But what we touched earlier, what can we as traders do to avoid this market sell-off and actually profit from it? Of course, like I mentioned before, there's beautiful reverses of the market called UVXY, SQQQ, SPXS, and many more. Of course, not just that, if you're an option trader, you have all the options to sell puts. And of course, if you're a momentum trader like we do, there's a lot of penny stocks that don't care, they really don't care what the stock market is doing. A lot of biotech companies have been really hot and there's a lot of opportunities to trade those. If you don't want to know more about how to trade momentum stocks, of course, check out our trade reviews, check out our Discord, and check out our Facebook group down below. We also post a watch list every single Sunday that you can check out either the Discord or on Instagram. All the links will be down below. Lastly, I want you guys to remember, if you're a long-term investor in the stock market, please don't panic and sell all your stocks for losses. Remember that over the big picture of 10, 20, 30 years, the stock market is 99.99% of the time will be look to recovery. Of course, there will be opportunities for you to pull out your money to invest in better companies, or to add on to whatever you have in your long-term investing to average down and benefit from the recovery back up once it finally happens. So remember that just because the stock market is trending down and is more likely to keep going down like I'm predicting, it doesn't mean that you shouldn't be trading. You should still be trading. There's a lot of opportunities that the stock market presents itself even during a bear market. Of course, with that beautiful bull market that right after the COVID crisis up until recently that made people money, they printed money going long. But guys, even a bear market could print you money going short. But remember, even if the market is printing money on a short side, you still need a plan to attack this market. Don't let it scare you. Take these opportunities to learn and take these opportunities to grow your account and become a better trader. Of course, guys, thanks for watching this video, and the only thing I ask of you guys before I leave is remember to subscribe down below.